Hi friends, Simit here from informedtrades.com. In this video, I wanted to talk a little more about the financials of mining stocks, how to evaluate them. In this one, we'll be talking about the actual income statement and evaluating companies based on their earnings and profitability. 4 key points. We'll be looking at what's known as the income statement here, which is just sort of, the last time in the previous video we looked at the balance sheet, which measures the assets and debts. This is more about the income, the revenue and costs. Earnings per share, which also signals dividend potential, basically a measure of how much the company's earning. We'll look at the concept of earnings growth and what that signifies, as well as PE ratio, which is a measure of the stock price relative to the stock's earnings potential. First point, income statement. On the screen right now, you see sort of a simple income statement. Basically shows the revenue, cost of goods sold, and that difference. With mining stocks, the revenue is going to be determined largely by the market price of the metal, and the cost is going to be determined by the company's cost of their mining operations. That's affected by a lot of the geology. Some regions are much easier to mine than others. Some companies have more expertise in mining. We'll get more into what determines the cost. It's basically that's where geology really comes in. We'll talk a little bit more about that in later videos. Revenue, though, is going to be largely a function of the market price of the metal. Earnings per share. This is basically, as the company earns profits, what portion of that profits, if we take their income divided by the outstanding shares, that's the earnings per share. When you buy a share of the company, this also tells you how much of the earnings you're buying, or what portion of the earnings you own. It's a good way to measure the value of the stock. It also signifies what kind of dividend potential the stock has, especially based on your purchase. Stocks that have high earnings per share also have the ability to give you a decent dividend per share, which is important if you plan on buying and holding for a while or looking for that residual stream that comes from dividends. The other key thing to look at, and you can get this information by looking at previous income statements. Most stocks are putting out income statements on a quarterly basis. This gives you the opportunity to compare how earnings are growing or declining. On the screen right now, you see the simple chart, and basically the point of this chart, which goes back from 1965, shows that stocks that have rising earnings, rising profits, also see their share price appreciate. This is a pretty intuitive concept, but it illustrates the importance of why we'd want to find stocks that have growing earnings or the potential of growing earnings. Price to earnings ratio. Basically, when we take the market price, the share price, divide it by the earnings per share, that tells us the PE ratio. The PE ratio is really important because it's basically a relative measure. You can use, with all this financial analysis, it's really important to view it in a relative context. That was something we touched upon in the last video. On the screen right now, we see the average PE ratio of the S&P 500 is about 20. So there are lots of mining stocks that are trading well below that. If you're a value investor, one sort of textbook concept of value investing is to find stocks with a lower PE ratio where you think the earnings can still rise. So if a stock's trading at a PE ratio of 10, 12 in this current environment, if it's in the mining sector and you believe that the price of the metal is going to continue rising and that its costs are low enough, that's a good opportunity. On the flip side, right here, this is when the dot-com bubble was, and we see PE ratio was over 45. So viewing this, this gives us a good perspective. When the PE ratio goes really high, it tells us that maybe stocks are overvalued relative to their earnings potential. When it's low, it suggests they're undervalued. That's about it. If you have any questions, want to join us or add more, join us over at informedtrades.com. Thanks and best of luck in your trading.